Welcome back. In this video, I'm going over who is a real estate professional for the IRS. This is an IRS tax classification, and many people are wondering, is a landlord a real estate professional, or who is a real estate professional? Is it a tax loophole, and how do I keep track of the time log that I need to qualify as a real estate professional? I'll be answering all of these questions and more in this video. If you're new here, my name's Amanda. You're watching The Business Finance Coach, where I simplify all the technicalities of money and business to help you achieve financial freedom, because I believe that the world needs you achieving your goals and dreams. If you're interested in growing your wealth with real estate, after this video, be sure to check out my free real estate crash course and free accounting worksheet for tracking your real estate. You can click the link here or check out the description below this video. Now let's jump into who is a real estate professional, how do I qualify for this, what are the tax loopholes? So to qualify as a real estate professional, which is a tax qualification, both of the following two criteria must be true. Number one, more than half of the work that you do in providing services, in working, must be related to real estate, property trades, or businesses. Also, you must have worked more than 750 hours during the year in real estate. Now, this isn't so much of a tax loophole, but this is a higher requirement for your real estate activity to qualify as a business. In order to talk about the pros and cons of being a real estate professional or not being a real estate professional, where the tax loophole is here, we need to back up and we're going to talk about, if you use your real estate as a rental, how that's treated for taxes normally. Normally, renting real estate is called a passive activity. So I'll talk about how that's taxed in a moment. When you report a rental activity, you report rental income minus all rental expenses, the costs of earning that income, just like in a business. And that leaves us with our net rental income or a net rental loss. If our expenses are more than our income, we have a loss. If our income is more than expenses, we have net income. Now, I have other videos in my real estate crash course that break all of that down into more detail and show you how to keep track of it in a free template and a bigger template that I have as part of my paid program. So you can check that out for more information. So each rental property that you rent is a passive activity, and it results in net income or a net loss. Now, the next thing is what happens to that net income or net loss. So if you have multiple rentals, they're netted together. Rentals are their own category. Also, if there's a business that you don't materially participate in, that you just invest in, you can net all of these activities together. They're all passive, and they're in their own specific category that you get to net them together. And so then you have a net passive income or loss from rental or business activities that you invest in. If you have a gain, it's taxed at your ordinary income tax rates. If you have a loss, it's not deductible at all. You can carry the loss forward in the future, but it's not deductible. Now, there are a few exceptions to this loss not being deductible. There's the active participation deduction of $25,000. Again, check out the free course for more details. There's if your rental is short term, so less than 7 days. If your average rental tenant is less than 7 days, that's short term and therefore treated as business. Or, you guessed it, our real estate professional. Our real estate professional has this higher stringent of working 750 hours during the year, but so it's more strict than a business. But on the other hand, gains are taxed for self-employment taxes. So that's the con of being a real estate professional. The pro of being a real estate professional is that losses are fully deductible. So you can use them to offset any other type of income on your tax return, W-2 employment income, or any income for that matter, business income, dividends, interest, pensions, retirement plans, all income. So just to recap, the general treatment of real estate rental gains is for ordinary income tax rates, but no self-employment taxes or payroll taxes if you're an employee. On the other hand, if you have a loss, that loss can be offset against other passive rental activities and businesses in which you only count as an investor. You don't materially participate in them. Otherwise, a net loss is not deductible, but you can continue to carry it forward. When you qualify as a real estate professional because more than half the services you provide are in real estate, and you meet this 750-hour threshold of real estate trader businesses that you work in, then your net income is taxed at ordinary income rates and you have self-employment taxes. However, on the flip side, any net loss is fully deductible. Now keep in mind, with a rental passive activity, even if you have operating losses, in the end, when you sell the property, you do get to take all of those losses. So even if you're always operating at a loss, you will eventually be able to deduct those. So there's really, as you can see, pros and cons to being a real estate professional. Because the IRS is weary of people taking the real estate professional criteria and saying they qualify so that they can deduct losses, you want to be sure to keep track of your 750 hours. Check out my template in my real estate course that goes over this and how to document your hours and that you qualify as a real estate professional. That's all for how to qualify as a real estate professional. I'd love to hear your questions in the comments down below this video. If you have questions about your situation, I'd love to hear from you. Or if you know someone who could use this video, do send it to them. If you enjoyed it, give it a like so that YouTube knows. And don't forget to subscribe if you're new here, or check out my real estate crash course and free worksheet for more information. See you next time.